2022 NPV was valued at $72 billion. Since then, we're adding nearly 1,000 BOEs a day, 10 horizontals, and Brooks development. It should have some reasonably significant impact on the reserve evaluation of the company and the NPV of the 2P NPV of the company.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz, and hey, we're in the first week of December. We're getting an update from Prospera, one of my largest holdings. The website's prosperaenergy.com. The symbols in the U.S., GXRFF, and in Canada, of course, PEI. Right now with me is CEO Samuel David and CFO Chris Ludtke. Gentlemen, I know it's snowing on this Friday, but you guys from our neighbors up north, nothing you're not used to.
Actually, it's, first of all, hi, Kerry. How are you doing? First of all, I think it's nice having some snowflakes on the ground. It gives us that Christmas feeling and spirit. It is the season.
Yeah. So, and last winter, though, we didn't get that Christmas feeling because effectively the weather was so bad, and due to circumstances you weren't prepared for, fields shut down. But this winter is going to be a different story, isn't it?
It keeps us on our toes all the time, that's for sure. That's Canadian weather, Calgary weather for you.
So, Sam, can you give us a production update as of now, where we stand?
Certainly. As you know, we're continuing to do our horizontal transformation. The rig is drilling, I think it's drilling the 8th horizontal right now. And while we're drilling, as I mentioned before, we shut off all the adjacent production. And because it's a very porous, permeable sand, we actually shut down the entire pool for production. So there's about 400 somewhat barrels that's shut in for the drilling. And also the new horizontal that we drilled also has to be shut in for the adjacent production. Adjacent horizontals that were drilled is also shut in, and they're also beginning to come on as we are getting to the near end of our drilling in that location. So there's about closer to 600, 700 barrels per day, BOEs per day shut in. Our production currently is about 1,000 BOEs, mostly barrels. It's 1,000 barrels a day. And we have oil is 600, 700 barrels shut in. We're also bringing on Brooks at the moment. As a matter of fact, as we speak, we finished our first well. We have perfed it, did our acid job, and it looks as expected. Might exceed our expectation. We're also tying in another well in Brooks as well. So all that leads to that we are getting more and more confident that we'll exit as anticipated at a production rate of 1,800 BOEs a day.
And could theoretically be higher. As far as the flow rates of these new horizontal wells, last time we spoke, you mentioned that it had exceeded your initial forecast. Is that still holding true?
Pleasantly, the pumps are operating at its lowest speed and efficiency because we don't want to exert a huge drawdown on the reservoir, and it's been holding the water cut. Mostly it's 99% oil cut, and now we're beginning to optimize more. The indication is we are draining undrained reserves that were tapped in by the vertical wells, and that gives us the fair amount of confidence on the oil in place and a significant reserve add to the year-end reserve evaluation, consequently the NPV value of the company. 2022 NPV was valued at $72 billion. Since then, we're adding nearly 1,000 BOEs a day, 10 horizontals, and Brooks development. It should have some reasonably significant impact on the reserve evaluation of the company and the NPV of the 2P NPV of the company.
If my memory serves me correct, you're getting over 100 barrels per horizontal well that you're drilling. Is that number?
I showed in the chart there, anything over around 500 meters of lateral pay, we were getting 100, 110 barrels per day.
Well, it makes my my limited potential for math a lot easier, because however many wells you eventually drill, I just multiply times 100 and I get your expected flow rate there, right?
I certainly hope to maintain those results.
So, Chris, as far as PEI's financials go, before Sam mentioned, or you mentioned, break even of somewhere around 500 barrels per day. You keeping a lid on cost? Is that pretty consistent?
Yeah, certainly, Kerry. And, with prices, the prices have fallen off a little bit since I think we were last on the show. We see break even maybe around 600 barrels a day gross this 10 seconds with $75 WTI and the heavy to light oil differential where it sits currently. However, with the additional volume coming online through the end of the year, we're obviously seeing our fixed costs reduced on a per barrel basis. And so that number is coming down with the additional barrels that we're producing. So happy to see the increases here.
Which means your margin's going up and your netback goes up, right?
Yeah, that's correct. Yeah.
All right. And as far as the drill program going ahead, for however many wells eventually get drilled, company's going to be able to pay for this.
That's right. Yeah, that's right. So we're financed to be able to execute the rest of the horizontal program. We recently announced some news earlier on where we talked about debt and GOR financing of roughly about $3.5 million. All of those proceeds are going directly into the ground to be able to support the drilling program.
All right. So from last year, 2022 to the end of 2023, can you just contrast the financial position of the company now as opposed to a year ago?
Yeah, certainly. I mean, I think we've seen a lot of our legacy debt being paid off. So we've seen reductions across the board with some of the payables that were inherited when there was a changeover from the old management team. We've seen the end of some of those payment plans. So we made our final payments in November for some of the 24-month payment plans that we worked on with vendors. But I think overall, Kerry, the company is poised really to start to move ahead based on these incremental barrels and the additional cash flow that's associated with it.
That's always good news. So, Sam, when we last spoke, you mentioned that drilling costs per well were coming in 15% below your expectations. Is that still running consistent with that?
In a per unit basis, because as I mentioned, the lateral 500 meters plus is giving us IP in the 100 plus barrels per day. So the next group of wells that we have commenced, we're targeting around 600 meters and 700 meters of lateral pay. Technically, we can extend our laterals to those length. And the first one we drilled, I think it was 540 or something plus. The second one, now we're in 600 meters plus. So the cost is corresponding to the time, but the savings has been under budget so far. Yes, and barring from any technical challenge that we might incur, which always happens because it's not just cheese that you're cutting through. There's heterogeneity in the reservoir, and there's different things we encounter, and that's fine. I would say it's an efficient operation.
Right. So effectively, based on the numbers you mentioned last time, it's almost as if every seventh well you drill is for free.
Well, I suppose you can look at it that way. Yes.
Right. So, hey, acquisitions. We've heard mention of them. I realize you can't get too deeply in the weeds here for obvious reasons, but are they moving ahead?
That part of our business strategy, I'm getting more and more excited about it. Because as we have gone into our development program and then our horizontal transformation, we've done a number of wells now, and now you could say it's repeatability. And same thing with the light oil development. We have encountered initial production tests as anticipated. So that horizontal development plan is proceeding according to the plan. And now we are able to focus on the other development to appreciate Prospera through acquisitions. So now I get to spend a little bit more time in accelerating these acquisition. There's one other point that I must add that allows me to do this. We hired a a very experienced individual that has a lot of working knowledge in this area as VP of Operations, John McMahon. This allows me to free myself a little bit from hands-on operation to focus on acquisition. As a result, we have about 5 acquisitions in play right now. The corporate strategy that we have, that we try to hit properties that are in distress and it's in primary depletion and hasn't been totally optimized, and we looked for light oil to complement our heavy oil dependency. And there's a number of them. They're all moving ahead, and I'm really hoping and pushing to complete all of that for Q1. They're going into LOI, and it was because now I have some time I can focus on this, and things are moving ahead. And I don't know if I'd be brave enough to mention, but there's U.S. acquisitions involved because we see some synergies. So this was the first time I'm alluding to something like that. It's not to change the focus, but the U.S. audience are very aware of Prospera Energy, and we've been getting a fair amount of interest in Prospera to combine with Prospera. So there's a number of things that's moving ahead, Kerry, and I think I can expand a little bit more in the latter part of January.
Excellent news. Well, I guess there's 2 places to drill for oil. One is in the fields, and the other's in the financial markets. And if you can get a good deal on it, why not? So, Chris, these acquisitions that Sam's alluding to, they would be accretive in nature. They wouldn't be dilutive, would they?
Oh, no, certainly accretive. I mean, what we're looking at here is each and every one of the acquisitions that Sam mentioned are roughly about 10,000 per flowing barrel to be able to add to Prospera. And, some of the peers that we aspire to look like, and even, in the future here, are all very valued in the $30,000 to $40,000 per flowing barrel. So you can see the, 3 or 4 times upside just on that basic math.
So really, I would almost liken Prospera to the potential of a roll-up to be able to take all these undervalued barrels, bring them into Prospera, and then revalue them at a higher flowing barrel.
Correct. Yeah. And that's what our team is set up to be able to do, is to be able to take these distressed assets, these undervalued assets, and be able to recognize the true value behind them.
But, that's not the only way we like to appreciate. Just it doesn't make sense, just revalue them. But we're not going to just do that. We are looking at these properties because we know there's reserves and we can optimize them. So we will supplement and support it with whatever barrels it came. We will optimize that barrels 1-to-1 or more, and then we'll get into reservoir management. So I think the appreciation and production will foster the revaluation.
Right. Yeah. So it's not just a question of taking the asset, putting it on the books. It's adding value to it at the very same time by increasing your flow rate, increasing recoveries, and cutting costs as well, I would presume.
Reducing op cost, environmental footprint, applying latest technology and some good reservoir management that most companies or most reservoir has not been applied to.
All right. Well, I think we got a really good insight into what's going on with the company now. It's moving forward. This time of year, things kind of feel like they grind to a halt or they slow down. But it sounds like in Prospera's case, that's hardly the case. So again, go to the website, sign up for notifications, prosperaaenergy.com, ticker symbols US GXRFF, and in Canada, of course, PEI. Gentlemen, best wishes for the holiday season. We'll touch base after the first of the year. Thanks so much.
Thank you. And Prospera wishes all the shareholders and stakeholders and everyone that's interested in Prospera a very merry, safe, Merry Christmas and happy holidays.
All right. Thank you. All right. Take care.
Thank you, Kerry.
We'll talk to you soon.
The Financial Survival Network.